happy to give you some insights there. You know, the multifamily market has continued to be extremely robust, even still through this COVID pandemic, which we're all managing. Last year, the market saw over $1.2 billion in multifamily volume sales for all property that are 50 units or greater. I think the biggest takeaway from this slide is the consistency of the fact that this market is now trading at well over $1 billion. That's a huge marker for a lot of institutional grade investors, as well as private equity funds, groups that are using institutional money, and high net worth individuals. They want to know that there's liquidity and scalability in this market, and seeing these kind of transaction volumes is what they want to see. On top of these sales, of course, is the small market under 50 units, which has traded about a $200 million over last year. So in essence, we're well at $1.45 billion to $1.5 billion in our total trades. And I think that's exciting to know. Really exciting to know. We got a place for those smaller market investors. We got a place for those larger market investors. Some of the interesting takeaways, I think, on just asset sales is the fact that cap rates have traded on your Class A product in that 4.4 range. You know, we saw some significant downward pressure on cap rates, about 30 to 35 bips across the board. On Class B, 4.9, and Class C, a little over 5%. The downward pressure has mainly been driven by the change in debt rates, where we saw some very aggressive debt available in the marketplace, from agency to bank to CMBS. The market area deliveries overall was 5,784 units. Again, up from last year, where we saw only 4,800 total deliveries. Previous year to that, 5,300 deliveries. And the market does trade somewhere in and around or delivering about 5,000 units and absorbing about that same year in, year out. I think important to note is that even through the pandemic, all developers continued to pursue the path that the fundamentals of the market really was telling everybody. Those fundamentals were the population growth, the job growth, as well as the lifestyle opportunity that is here and the affordability. And we'll talk a little bit more about kind of the real drivers behind some of those decisions. But these developers are betting on Salt Lake in the long term. They're betting on these investors coming in and participating here because they know that Salt Lake has all kinds of runway. I think it's important to recognize that given last year's record high in total deliveries, there were a few properties that were delayed into last year from the previous year, and there were some, of course, still yet to deliver looking forward. We have about 1,700 units downtown alone that are looking to deliver in 2021, and about 4,000, maybe 4,100 expected to deliver in just the greater Salt Lake County area. Yeah, we believe that we will continue to see some interesting trends that really mimic what we've seen in other markets, our neighboring competitive markets like Phoenix and Denver and Portland, Las Vegas, and in Seattle, Los Angeles. These markets are vying for the attention of these investors that are out there, and they're playing chess. They're moving their chess pieces between these two markets as they sell in and buy new product. And this, again, is what really are the drivers in making the decisions by these investors. They're looking at our market going, wait a minute, we've got higher cap rates than most other markets and lower price per units or lower pricing across the board. As you compare, Phoenix is one that trails fairly closely to everything that Salt Lake does. They tend to have a lot older, more Class C product, different from Salt Lake City, and we have seen some more aggressive pricing. But these investors are coming here saying, look, I can trade out of my assets in California, where we have legislative policy issues regarding inclusionary zoning or vacancy control or things that might put a damper on further development or even ownership, they're coming here, trading out of those assets that are 30 years older and getting better cap rates and better pricing on brand new product. So it's all very exciting. If we were to talk again about cap rates, I would share, Class A trading at 4.4%, Class B at 4.9%, and Class C at 5.1% on average over last year. Looking forward, we think that we will continue to see some further compression on cap rates, simply because debt rates aren't going to change anytime soon, and we believe that we will have the pent-up demand put probably an increased amount of pressure on all those investors clamoring for product, because across the board, meaning across the nation, there just is not a lot of product available to purchase. A lot of investors or a lot of owners just ask themselves, where am I going to put my money? Where's it going to go after I sell? I have the same problem you have, Mr. Buyer. So if you want to motivate me, you better pay the price.
When it comes to affordable housing, I feel really strong that we need more education and communication and innovation. Generally speaking, amongst the public, when we say affordable housing, everybody often tends to go to HUD housing and assumes that we're only talking about products that are income restricted. And we need more of those, absolutely. We need to execute more on those. We need it to be a little bit easier, less red tape to get those developments approved. But I also strongly believe that we need to offer more what I call market rate affordable housing. A gentleman named Daniel Paralek termed the phrase missing middle housing. And these housing options are meant to be the connector between a single family home and a multifamily offering. And that could look like a townhome or a duplex or cottage homes. And they're really just higher density housing types that are going to give more affordable options for the future. And they're going to require a lot of high density zoning by city councils. They're going to require communities understanding that if you want your children to live next to you, which as a mother I want, or your aging parents, which I want that too, we have to be more nimble in terms of density, and we have to eliminate the not in my backyard mentality. There's no one size fits all for affordable housing, and so I think opening our minds to more missing middle housing is critical. I believe our shop is a present example of somebody who is offering multiple types of housing types for sale, for rent, different building offerings, and I do believe it's helping eliminate a portion of the housing crisis.
Well, there's no question that the pandemic has had that effect. We're seeing it in our properties. We're seeing that studio type units are less in demand today than they were a year ago. 1 and 2 bedrooms are more in demand. And a lot of that is that people want the extra bedroom to have as a home office. But I think we're going to see some adjustments in terms of layouts. How can we fit a work from home space in a smaller unit so that a studio can be effective in a work from home or work from anywhere scenario, right? It's not just work from home, it's I can work from anywhere. So I can work in San Francisco and live in Salt Lake or live in Hawaii or anywhere. So certainly there's going to be adjustments. We'll see small offices built into public spaces so that somebody can have a small office, on a kind of a workstation type basis. They can use it for a few hours. We'll see public spaces that have some smaller meeting rooms that could be used for work from home, work from anywhere. And I think those are some of probably the biggest adjustments that will be made in the next year or so.
What a great question. We certainly saw a lot of trends and opportunities and shifts in design pre-COVID. COVID has absolutely accelerated those trends, particularly in new development. How is it going to affect multifamily moving forward? If you look at the development that's happened in Salt Lake City since 2012, I mean, we've added a new city of multifamily, over 30,000 units. And most of those have been very similar, to say it kindly. And we started seeing a trend in about 2016, 2017, where we really saw a lot of out-of-state interest in our market, really keen on design and creating something different and an opportunity their thesis was really to provide, just buildings with a look and a design that would attract a specific tenant base and really give it help it stand out. Moving forward through, now post-COVID, I think that's one of the number one opportunities in the Salt Lake City market in general and in multifamily is post-COVID design. Whether that's designing one bedrooms now with a den or, some home office feature. From 2012 to 2018, we tracked the amenities arms race, right? So every building that was built, we have a bigger pool, we have, a golf simulator, like whatever that next thing was to attract that tenant base. And now we're moving towards really creating a lifestyle location. I think you're going to see a lot more co-working in the space in design and a lot more garage accessed units. One of the trends we saw through, post-COVID or during, when COVID hit, as I just took my mask off, we're still in COVID. However, one thing we did see is an acceleration in absorption and rising leasing rates for garage accessed units, so townhomes and, less dense suburban product.
Though not to the extent that we've seen it in those gateway markets. Certainly, because we've seen this shift from smaller units, the studio units to a one bed or a one bed to a two bed, there has been some movement from the downtown market to more of the suburbs, but it's not as dramatic. The price difference between a downtown apartment and an apartment in Sandy or Draper, there is a bit of a difference, but it's not dramatic. And so, while there has been some, we don't expect it to be a long-term shift. We do expect that the downtown core will remain strong and vibrant. And a lot of that will depend on when businesses really come back to a greater degree of working in the office. I saw some numbers from the Salt Lake Chamber. It was probably a month or two ago, but only 25% of workers were in their offices in the downtown core. That will start to shift as the vaccine rolls out, and that will come back. And the amenities of a downtown location can't be beat. A lot of people want those amenities, be able to walk to the restaurants, walk to entertainment, walk to, a park or, use transit here locally. So certainly we feel that the downtown has long-term viability.
Absolutely, it has. I mean, that was a trend that we saw pre-COVID. We saw a lot of tenants, whether it's a demographic shift or millennials were finally, getting married or deciding to have a kid, whatever that was, we did see that shift early on. We started getting into what we, refer to as the missing middle, which is the townhome product. We flew in Dan Paralek for ULI, I think in 2017, who really was the guy that coined the term the missing middle, and for decades we had only built either stacked flats or homes, single family homes, and there's this big opportunity in that middle. And certainly during COVID, and pre-COVID we saw that, but COVID has absolutely accelerated that. And we saw some projects that we tracked that saw 9% increases in 30 days in their rent rates, and absorption tripled. And so absolutely we saw that. Post-COVID, or we're still in it, so we will continue to see that trend. Yeah, so suburbs are hot. Garage access units, more size, we're at home more, you'll see that trend continue. Yeah, great question. My joke is that Utah has been an ATM for Los Angeles for many, many years. Also the Bay Area, we'll say those two markets specifically. With that comes an acceleration of, underwriting and expectations, and really it's helped our market grow up. It's required us as brokers to really grow up. we have certainly seen an acceleration, I'd say an expansion of markets that are interested in investing here, absolutely, and that'll be a trend that will continue. On the design side, I mean, we really struggled in April of 2013. We marketed one of the highest profile downtown development sites called it was 4th and 5th, that eventually became Encore. We really tried hard to market that nationally. We got a group out of, anyway, short story is, that's kind of what started this whole trend. When Invesco bought that deal in 2016, we saw increased interest in the market because now there's bigger fish to exit you. A lot of the out-of-state guys wouldn't come here because they didn't know if there was somebody that was ever going to, and Salt Lake City has really grown up.
Yes, I do believe that the trend for high-rise buildings will continue. There most certainly is a demand for it, but it will also be the most expensive price per square foot residential space in Utah. And that doesn't work for everybody. So what was confirmed to me in 2020 is that our human race is uniquely different, and that's a good thing. So there's no one size fits all. I think that really relates to real estate too, because that's where we live. And so mid-rise developments, I think, will continue to rise and be an answer as a more affordable solution. I also believe that innovation in the mid-rise development should and could happen at a more rapid pace. I know for myself and other forward-thinking developers, after COVID-19, you should be asking yourself, what should I have known? What can I learn? How can we adapt our offerings to meet the needs of the users who live in our buildings? And my hope is that the answer to that question looks a little bit different for every developer, so the end result is more innovation at a more rapid pace than ever before, because this industry has typically been one to accept more of the same, and I think that needs to stop.
We have some guys taking some big risks in our market as construction costs have increased dramatically. I think we'll see a continued trend in providing, incredible urban housing, high rises. I think there's a lot of eyes on the deals that are in motion right now. There's been kind of a split because of construction costs. You either need to chase the highest end opportunities, which I think our market has grown up to absorb, and they're going to be chasing $3 rents. These are going to be unbelievable. I mean, you'll have people that they'll rent there and in Manhattan. Those will be their two hubs. It's going to be really awesome to see the tenants that absorb there. I still think that suburban and mid-rise will dominate from a construction cost standpoint, and we still need a lot of housing. But it is going to be really neat to see our market grow up with these guys that are taking a big risk, but they're going to see the reward in our market.
Well, I mean, I know for my own shop, we're only as good as our people, right? The talent that we have in the four walls of our building is really how great we can be. So the more in-migration that comes to Utah, the more smart people, the more creative thinkers, the more talent who come from different backgrounds, different places, I think we're gonna just see a bigger variety of what could be. I hope there's more creativity. I hope there is difference in not only just building product types, but actually pushing the boundaries on how people wanna live individually and collectively with others. And I think that will all come back to really the brains that are living in Utah at the time things are being created. I believe as developers, if we want our projects to succeed, then we have to take ownership of our own creations. And so when we go into a community, we're trying to educate our neighbors, we're trying to educate the municipalities on what we're trying to do and why. Of course, I would love for everyone to be educated, but I'm not gonna put my livelihood, my team's livelihood on hoping somebody else is gonna do something. I'm gonna take that responsibility in our own shop.
Through the pandemic, we know clients that we work with directly, as well as what they've reported to us on their experiences. Many of them have second homes in Park City. Guess what? Those became first homes last year. And they decided to move out of their places in New York, in LA, and spend the majority of their time here. Why? They're still able to get outside. They're still able to engage in the community, obviously with precautions and safety first and foremost, but they enjoyed it. And then they realized how much, not only that they loved it for the reasons why they originally purchased, but that they can truly operate remotely and manage the affairs of their businesses where they are. I think we're going to see a lot more of that. Many of those people are significant executives of investment funds and firms and heads of operations for companies, et cetera, that by coming here, having that experience, it's going to lay the groundwork for many others who are going to say, I've had enough of the urban core experience in that New York, LA environment, and I want something different. I want something different. Not to mention, you know, the leading edge of the millennial age is that 33, 35 years old, and they're at that time of life where they may have started a family or thinking about a family or right around the corner and realizing that it's difficult to do in the Bay Area or in LA when they consider commuting and they consider the cost of living and their time with their families. Well, working remotely, they can do it here and really have it all. I mean, I think that's probably one of the biggest messages of Salt Lake City and operating or living here and operating your business and or working for a company is you really can have it all. Incredible lifestyle and incredible living experience, no matter that particular project with the new amenity or the new this or that. They can truly have it all. Yeah, great question, and it couples with your other question regarding trends going forward, which I want to speak to again as I've been contemplating it both. We have under construction downtown right now, Liberty Sky, which is our first new high-rise development. There's another project called Kensington, which is coming out here that'll start turning the dirt end of the year. There are a couple of others that are slated in the works, and these downtown high-rises are going to bring a completely different level of investor, ultimately, that'll want to participate in this market, a different tenant, and will project an image of Salt Lake as being more of that active nightlife, active lifestyle experience where one can truly have the latest in sophistication with their living experience, as well as in their units and in their buildings, as well as with their lifestyle out and around. And so I think Salt Lake certainly needs to be very progressive in considering that density should be paramount in their efforts, particularly in CBD locations, town center locations like Sugar House and other areas that might be a little bit more disjointed town center locations, such as with the Sandy Civic Center, but nevertheless have an approach that density is going to be paramount to bringing bodies downtown to help provide for businesses and what's going to happen on that front. With regard to downtown again, I mean, looking at 1,700 units that are going to be coming online likely in 2021, that's excellent. We need that, and quite frankly, we need more. We have I think it's 1.1 million square feet of office space. That's going to, in our projections, produce probably 5,800 jobs. Many of those will be young professionals that'll want to have a place to live close by. Or even if not young and there for a longer term on renting, that near-term renter that'll come for maybe 1 or 2 years until they find where they want to go purchase a home, et cetera, maybe an executive or so. And the demand for product is only going to grow. A lot of challenges in the states where we compete. When you look at anything on the western coast, particularly the Pacific Northwest, and the challenges they've had just in their urban core, socially, irrespective of just the economics of living there and the cost to live there. We will have competition that comes from organizations like Microsoft and Amazon now building purpose-built residential property for their employees. You know, we don't have that slated in our market just yet. However, the units that will be provided will certainly be leased up. I think those on the cutting edge of what they can deliver in terms of the specialty of the building is of great importance. I know of projects that are looking to focus specific to the professional and creating more networking opportunities within their buildings, networking spaces, and that'll be a huge contribution to this market. Not to mention the overall look of downtown and the feel of downtown, the vibrancy of downtown as we do get more of those bodies. Great question. I think we really need to think through how the end leaser, who's all of our end client, is going to engage with where they live, not just the property itself, but the surrounding community. So this goes to how a suburban developer might look at a project and what it's going to contribute to that lifestyle that that individual renter has. It's not just a check the box, I've got a pool, I've got a hot tub, I've got a fire pit to sit by and a fitness room. I need to have an experience, and that experience is going to interface predominantly and lead out with technology, you know, particularly downtown. Do I have areas in and around my property that are going to accommodate for rideshare programs and or other transportation that's available downtown? Do I have the connectivity with my internet, not only in my unit, but throughout the facility, so that I can engage with networking opportunities, have business meetings that will really make a difference? And that's where I think the suburban product really needs to think through, is accommodating many of those people who are likely to not maybe work full-time back in the office now that we've had so many people operating remotely, but rather it becomes a three-day work week. And then those other couple days or 3 days, whatever it's going to be, they have ability to engage in their business where they live. And that might require a conference room, it might require, you know, meeting space of one kind or another. All the while being able to, you know, get the cobwebs out and, you know, get a good workout in with the latest in trends for fitness. I think that's something that has become even more paramount in everyone's life. And so that certainly is a trend going forward on an amenity that'll be of importance to these renters. Really quality fitness abilities.